Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of August 18th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Last week was definitely a good week for Delaware mortgage rates. They were able to move lower. If you take a look at the bond chart on the screen, you can see mortgage bonds found the bottom right there on Monday. We're able to rally higher all week and have moved the short-term trend for bonds to move higher, which is interest rates to move lower. Friday, we were able to close at the high for the week on the bond. So we're going to recommend that you float your Delaware mortgage rate to start the week, seeing if we can continue with this momentum move in the bond market, which will move Delaware mortgage rates to some of the lowest rates of 2014. So we definitely recommend floating and see what happens there. Now let's dig into some of those reports. Economic reports were able to help the bond market move because we had a bad report from the retail sales for July 2014. There was no change in retail sales from June to July. This was the lowest reading in 6 months, and it showed consumer spending slowed in almost every area of the economy. This was a bad report, was not in line with the economy that's growing. And if you remember from the previous reports, we saw the first reading of GDP for the second quarter as a 4% increase. Well, that's not supported with this retail sales report. So we may see the GDP for the second quarter when we get the second reading come out lower. So we'll have to keep an eye on that. Now, we also saw some bond-friendly news last week that helped the rally. We had a report on inflation, which was the Producer Price Index, PPI. It came out very tame. It measures inflation at the wholesale level, and it showed an increase of only 0.1% from June to July of 2014. And the yearly dropped from 1.9% to 1.7%. So that is well below the Fed's target of 2%, and moving inflation down is definitely good news for mortgage bonds. Now, Thursday we saw the release of the weekly initial jobless claims. That was a weaker report because it did tick higher to 311,000 claims, up from a revised 290 claims from the week before. So moving in the wrong direction. Still not an overall bad report because we're still in the low 300,000s, but it did move the 4-week moving average up from 293,000 claims to 295,000 claims. But we're still around an 8-year low, so we've got to watch these weekly initial jobless claims. If they stay low, that's a good sign of the labor market. But if they start ticking up from here, that could be another bad sign for the economy. Now, in housing news, we had a report from Realty Track on foreclosure filings. And across the nation, it increased for the first time in 4 weeks, moving up 2% from June to July 2014. So even with the increase from June to July, though, foreclosure activity is still down 16% from a year ago. And July 2014 marks the 46th consecutive month of foreclosure activity decreasing on an annual basis. So even though we saw a slight increase, overall, still a good report on housing. We're still down 16% on foreclosure filings from the previous year, so that is good news in the housing market. Now, in the local news, the next first-time homebuyer seminar is in Newark, Delaware. That is Saturday, August 23rd from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for that event by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.